Let's talk about Tesla. Okay, what was it? More than 2 years ago, you're at Sohn. You pitched the converts.
Converts, yeah.
Where are you with those today? And then I want to talk to you more broadly about that company.
So if you take a step back, right? If I asked you to sort of, attempt to drive a golf ball off the pier here into a teacup and gave you 1 million tries, I suspect that in 1 million times you would not be able to do it. But if you then took somebody else and they were able to do it 9 times out of 10, you'd say, wow, that person is a great golfer. The analogy that I would make is Elon basically did that equivalent. He was able to send a rocket into space, do all kinds of interesting, enormously productive, useful things for the world while in space, and then come back down and land on a boat in the middle of the ocean. The kind of technical sophistication that he has in his mind, that he's been able to apply across his companies, is second to none, quite honestly. So when we looked at Tesla, what we thought was a company at an inflection point that was as close to its version of an iPhone moment. And what I mean by that is a company that had been growing up, taking risks, and had finally found the mass market product that would unlock an enormous amount of product market fit. And that was the Model 3. And so far, what I would say is he's living up to what he has signed up for, which is to commercialize electrification, to commercialize an incredible user experience at a price point that has frankly cannibalized its competitors. And what you see in the results, in my opinion, is a company that is now maturing under all of that demand. And so, again, is it the best suited company if you want to drive and observe quarter over quarter precision and performance? No. But if you want to take a step back and take a 3-5 year view and say, where can I compound my money? And particularly with the converts, what's so beautiful is it's downside protected because it sits on top of all the equity and the other debt. And so if you have any concern that there's liquidity issues, or if you have any concerns that the company may have to sell, they get paid first. So to me, it was a riskless option on the Edison of our generation.
But you weren't necessarily comfortable enough with the story to buy the common stock?
The reason is because the common stock is not controlled, unfortunately, enough by him or the insiders. What it's controlled by are a bunch of vulture-like venture and hedge funds, mostly hedge funds, who like to prey on that company. If you look at, for example, the Twitter traffic, or if you look at the forum traffic around Tesla, the amount of hyping or under-hyping, the amount of sniping is enormous. All of that signals to me that it is a market that is out of the control of the founders and the executives and firmly in the hands of financial manipulators.
Well, come on,
so my perspective is buy the bonds, you're protected, and allow Elon to execute.
Tesla's stock moved lower once again Monday, falling almost 5% in midday trading, the continuation of a fairly steady decline since Donald Trump took office. Shares of the automaker, trading at around $384 per share in midday trading, are down more than $43 a share since their close on January 17th, a dip of more than 10%. That comes as CEO Elon Musk has been spending a large percentage of his time running the Department of Government Efficiency in Washington, D.C., and not focusing as heavily on Tesla. The steady drop in Tesla's stock is likely due to a variety of factors. Monday's decline follows news that Tesla has lost market share in Sweden and Norway, despite a large increase in overall car demand. In January, Tesla sold 405 new vehicles in Sweden, a 44% drop from the year prior. Norway was down 38% with 689 vehicle sales. Also, the looming enforcement of tariffs on China and Canada are scaring investors. Musk recently conceded on an earnings call with analysts that while Tesla has tried to localize its supply chain, it's still very reliant on parts from across the world for all our businesses. Therefore, the imposition of tariffs, which is very likely, will have an impact on our business and profitability. Canada is a key supplier of automotive parts, as is China, and Canadian officials are specifically focusing some of their ire with Trump's tariffs on Musk. Premier Doug Ford announced Monday that Ontario would scrap a $100 million contract with Starlink, which is part of Musk's SpaceX. Tesla's stock moved lower once again Monday, falling almost 5% in midday trading, the continuation of a fairly steady decline since Donald Trump took office. Shares of the automaker, trading at around $384 per share in midday trading, are down more than $43 a share since their close on January 17th, a dip of more than 10%. That comes as CEO Elon Musk has been spending a large percentage of his time running the Department of Government Efficiency in Washington, D.C., and not focusing as heavily on Tesla. The steady drop in Tesla's stock is likely due to a variety of factors. Monday's decline follows news that Tesla has lost market share in Sweden and Norway, despite a large increase in overall car demand. In January, Tesla sold 405 new vehicles in Sweden, a 44% drop from the year prior. Norway was down 38% with 689 vehicle sales. Also, the looming enforcement of tariffs on China and Canada are scaring investors. Musk recently conceded on an earnings call with analysts that while Tesla has tried to localize its supply chain, it's still very reliant on parts from across the world for all our businesses. Therefore, the imposition of tariffs, which is very likely, will have an impact on our business and profitability. Canada is a key supplier of automotive parts, as is China, and Canadian officials are specifically focusing some of their ire with Trump's tariffs on Musk. Premier Doug Ford announced Monday that Ontario would scrap a $100 million contract with Starlink, which is part of Musk's SpaceX. Tesla CEO Elon Musk is the first person on Earth to have a net worth of nearly $500 billion, and this has been driven by the rise in Tesla stock as a bulk of his wealth comes from his holdings in the company. Share market data shows that Tesla stock has rallied around 80% in the last 1 year, taking the company market value to $1.27 trillion and Elon Musk's net worth to $427 billion as of January 15, 2025. Let's break down what's behind this surge, why investors are flocking to Tesla, and what it means for the broader EV market. On January 1, 2024, Tesla's market cap stood at $789.89 billion. Fast forward to December 6, 2024, and that number nearly doubled to $1.483 trillion, according to company's market cap. This was an 87.75% increase in less than a year, making Tesla the first auto company to cross the $1 trillion milestone. This surge in valuation has translated directly into Elon Musk's personal wealth, as he owns about 13% of Tesla, according to the company's 2024 proxy statement. Starting the year 2024 at $229 billion, Musk's net worth skyrocketed to $486 billion by December, an astonishing 112% increase, as per Bloomberg Billionaire Index data. In simple terms, Musk's wealth grew by $245 billion in 2024 alone, making him the first individual ever to cross near the $500 billion mark. So what's driving Tesla's share price surge? Tesla's advancements in AI, particularly with its self-driving technology and Dojo supercomputer, have captivated investors. The introduction of Optimus, Tesla's humanoid robot, has added another dimension to its growth narrative. According to Morgan Stanley, Tesla's unique combination of expertise in data collection, robotics, energy storage, and AI has positioned it well in the emerging autonomous mobility market. The 2024 U.S. presidential election, which marked Donald Trump's return to office, has heightened expectations for regulatory easing in the autonomous vehicle sector. This political shift has significantly boosted Tesla's growth prospects. Tesla shares, often seen as a bellwether for the Trump trade, have surged approximately 65% since Trump's victory, according to stock market data as of January 15. Tesla overtook one of Germany's most prized premium car brands, Audi, last year, despite selling fewer vehicles than expected. Volkswagen AG's Audi sold 1.67 million vehicles in 2024, down 12% from a year earlier, dropping the brand behind Elon Musk's Tesla, which delivered 1.79 million vehicles last year, according to company statements. Tesla's Q3 2024 revenue grew 8% year-on-year to $23.35 billion, with net income rising to $2.17 billion. Expectations for record Q4 deliveries have further fueled investor enthusiasm. There has been a shift in the automotive and technology industries, with EV adoption increasing. As per International Energy Agency's data, electric car sales remain strong in Q1 2024, surpassing those of the same period in 2023 by around 25% to reach more than 3 million. Here are a few reasons to consider buying Tesla stock. Dominance in the EV market. Tesla remains a leader in the electric vehicle (EV) market with high global market share and strong brand recognition. Expansion into new markets, e.g. Cybertruck, semi, and smaller, affordable EVs, may boost sales and revenue. Technological leadership. Tesla's investments in autonomous driving technology, including the full self-driving FSD software, position it as a major player in the future of transportation. Development of its Dojo supercomputer for AI training could provide competitive advantages in self-driving and other AI applications. Renewable energy growth. Tesla's energy business, including solar panels and energy storage products like Powerwall and Megapack, has significant growth potential as the world transitions to renewable energy. Global expansion. Tesla continues to scale production capacity with factories in the US, China, Germany, and potential new locations. This global expansion may lead to higher production volumes and lower costs per vehicle. Long-term vision. Elon Musk's long-term focus on sustainability, innovation, and vertical integration appeals to investors with a long-term investment horizon. Tesla has been one of the best-performing stocks on the market over the last 5 years, but also remains a battleground among investors. CEO Elon Musk has long been a lightning rod for controversy, most recently for his strong support of newly elected President Donald Trump, who has put him in charge of the new Department of Government Efficiency. Tesla stock has also soared since Trump was elected, up by around 70% since then, making the company one of the largest in the world. According to this research from the Motley Fool, the company was the 8th largest in the world as of January 6th.